Welcome to Friday, June 23, just coming on 6 a.m. And going to give it to you because we are in a global roll down, as they would say. UK, Eurozone composite PMI lower than expected. UK lower than expected. We are getting Fed's Bullard, or actually, we already got Fed's Bullard, and he's a non-voting member, but he's bearish as hell, or hawkish. Bostic at 8, Mester at 840. U.S. Services PMI and Manufacturing PMI right after the opening bell, and then at 140, again, Fed's Mester, who doesn't have the impact that not going to say it because it's still Pride Month. So here we go. Japan down 2.5%. UK FTSE down 0.25%. DAX down 0.7%. Hong Kong down 1.7%, 40% from the all-time highs. Bitcoin and Ethereum flat. US dollar climbing steadily back up into the 103s after breaking below 102 yesterday. And gold on that very, very significant 1923.70. So here we go. And June. Started at 41.83, had that massive run to 42.21. Big gap, never been filled. 2 days, closing in the 4400s last week. 14400 print, still have that gap unfilled. And back to 43.81 with lower lows all during the week. Yesterday, we only got down to 43.52 and bounced off of it horrifically with 3 gap downs during the course of the week and a continued pathetic range. 33 points on Tuesday, 26 on Wednesday, and yesterday, 30 points. But then again, that brings you into yesterday. Only had that one spread that I kind of tried to highlight, having already preemptive sent out everything on this on Wednesday, that Thursday was coming. Bullish put spread, $3, needing a close above 43.65. Said as clearly in English as I can possibly write, although I write more in American than I do in English. With it Thursday, sure, the bullish put spread looks and fits the best, but it simply doesn't, from a zoomed out short-term view, look strong enough to be confident in for a large position. So if you had one contract, you made $300. If you had 2 contracts, you made $600. If you had 3 contracts, you made $900. If you had 10 contracts, you made $3,000. If you had 20 contracts, you made $6,000. Finished out full credit, quite obviously, because of the way that we closed over there at 43.82, right at the very bottom of that gap that we were pointing out here all morning, saying Thursday, those waiting to sell calls, you can assume 43.85 shows above. As we were getting closer to the open, shared this left shoulder head, right shoulder view, saying, I still want to see, I like to see 43.37. That's what I'm looking for. Thursday morning, this is how it looked, down overnight into the open, and then straight up when the opening bell rings. So remember, it's Thursday. Thursday, we filled that gap just before 10 o'clock in the morning. So therefore, it went immediately to looking at 43.86, 43.89 gap, which still has not been filled. And as we come over and look at how we finished off, we made it as high as 43.82.25. 3 lower lows, 3 lower highs, 3 lower lows, 4 lower highs. 3 lower highs, 44, 48, 47. In any condition, I want to see here that we failed to get up above that COVID low 100% area, 43.83.72. So this is a first little signal. Second one was me getting a phone call from my mentor who gave me my first job telling me, motherfucker, you better be short. And yeah, I took that phone call very politely and proudly. May 24th, we hit 4103.98. Today is 20 trading sessions since we have gone minus 1% intraday. Now, somewhere in the alert room towards the bottom, as I had shared, going back to yesterday, because I wrote today, and this was yesterday when I wrote today. So it was yesterday. Yesterday marks 19 trading sessions since the SPX has had a minus 1% drop visit. The last run, March to April of 2023, it went 20 trading sessions before we got that 1% day. Prior long runs were November 2021, 24 trading sessions after we had that big October bounce, if you recall. September 2021, we had 20 trading sessions. June of 2021, we had 18 trading sessions. And in April of 2021, we had 21 trading sessions before we got a minus 1% intraday move. For today, being that this is Friday and we closed at 43.81.89, that would be 43.38.07, which does line up with my 43.37 that I would like to see, and we will see if that takes place, because over on the QQQ, range is still amazing. 6 points yesterday, 5 the day before, 4.5 prior to that. Last week, Friday, 5.5, almost 8, almost 6, 4, 5. Range is sick over there on QQQ. We had two minus 1% down days on Wednesday, Tuesday, and Wednesday. Come in yesterday, and we got a plus minus 1% day. Intraday closed above that and filled one of the two gaps. However, we did fill that other gap, but it was overnight. And it wasn't overnight in the overnight trading session. It happened right around 6 p.m. So I'm still calling it an unfilled gap. But for today, we're looking at 370, which would force this to be a green week because it's 365.95. And then you've got 362.51, and we've already done our green week count as you will go back and apologize, red fish, red fin, whatever the fuck your name is, because you ain't here no more after next week. The June 23 trades of the week, SPX SPY QQQ. The 4,443.95 expiring today, over 100% on a close below 43.95 today. SPY 437.46 is the candle for the week. 439, 438, 50 cents. It's not really 100%, even though it is, but it's not. So it's only a 95% trade. So this one here, again, closing below 438 today. Looking at almost 100%. And then over here on the QQQ, 365.98, buy the 368s, sell the 367 calls. Again, almost 100%, call it 95%. And where we are right now is at 363.90. And looking over at our charts very quickly, in fact, we'll start over here with the futures. The futures are down pretty significantly. We're down 100 points over on the NQ. We are down 20 points over on the ES, 100 points on the Dow, and almost 15 points on the Russell. And the Russell is the weak link. The weak link, the weak link, the weak link, and the NASDAQ, as you see over here, still holding above that 15,000, which is right above yesterday's lows, which would be QQQ roughly 361, 360 and a half, right where that 15,000 is. The Dow, you can see a clear bear flag. As you can see here, nobody is oversold, nobody is overbought, and weakness is starting to show as we are below the 5-day and the 10-day on all four indices. Already getting a bearish crossover on the 10 and the 5 on the Dow. Already a long time crossover on the Russell on the 10 and the 5. just pushing on to the 20-day, and here we are below the 10-day on the NASDAQ and the ES. So going into what our 1 hours were, because again, on Thursdays, being that they have all been green, more importantly and more significantly, you don't fuck around with a NASDAQ 4 hour that is oversold. And it proved to be prudent. 1 hour charts, you had a fractional little weak buy divergence over on the SPX, and we recovered and we repaired the 1 hour as we got back up here into the 72s on the RSI. Over here on the NASDAQ, exact same thing. Very good oversold on the 1 hour and more significantly on the 4 hour, as was pointed out. And we are back up here around 77. The Russell, dead fish, red fish, and here you are over on the Dow, holding fractionally above this big 33728. Steadily climbing along right there in the middle zone, neutral. So that's what you're looking at from your 1 hour cash indexes. Your futures, your 1 hours as you see, and that brings us into where we are going to, which is our SPX. And here we are. Coming off of that last minus 1% day when we hit 4103.98, you could see this absolute shove down your throat, push up to that 44, 48, 47, which, as I said before, has converted us as we broke above this level here back in the middle of June. Now confirming that we are in the bearish B more so than the bullish B. So the move that we've had so far from 44, 48, 47, decline of 2%, right back up here roughly to the 5-day moving average and that COVID low 43.84, 10-day sitting right below. With the gap down today, we are looking right around 43.60, which, as you know, has been your support resistance for the last 5 days. And the decline to the downside is pending minus 43.37 to head down to this 43.15 and more so 43.05. Come over and look at it from a bearish view, and that's exactly what we're looking for here, where if it is to be a continuance of this bearish line still climbing for one last push up to the March highs at 4,600, the wave for decline should come down into this zone of 42.98 right to around 42.48. As long as it doesn't break below 41.66, that upside for the next move up as we head into earnings can continue to be alive. Here you are in the QQQ looking at the exact same time frame from the last time that we had a 1% drop on the SPX, 4103.98. And this is your shove up in your face with the big gap, 336, 331. 13% move, and here we are steadily just making a nice little wave, which should come down to around 352, 350, more likely down to around 346, and then we will see what's real and what damage has taken place over on the daily. Damage such as this over here on the VIX, again, coming from our last minus 1% day on the SPX, where we went up to 2081, almost to that 2102, closed in the 20s, and have been steadily declining with a major gap up here unfilled above 1750. And once again, we have created a gap below overnight that needs to be respected, because these gaps below, as they continue to be created, continue to be filled on the very next session, ever since we started back here on June the 5th. So we have to have a little bit of respect for this, but undoubtedly that is pending, that we should be very aware of, that there is a gap to be filled over here on the VIX, as was yesterday and the day before and the day before that and the day before that and the day before all the other ones. And here we are over on the IWM. IWM resisting up here on the 400-day moving average when it hit that top. 9% move off of this May 31. As you remember, I was saying as we were heading into June, the Russell and the Dow were negative on the year. Negative on the year. you got your big gap up over here on June 6th, over for June 7th. And as you come down here, we are right back to the November 9th. Joe Biden wins the election, and Pfizer comes out with a cure for COVID, which never existed. But anyway, it was a big moneymaker for a lot of politicians. November the 9th, COVID cure, 181.73. We're right back down to it. November 9th, that was in 2020, for those that don't remember. 181.73, right back down to it. You got your 100-day moving average here as we have broken the 20-day, the 5-day, and the 10-day, which are inverted. 100-day moving average sitting right below under 181, 200-day below that, 50-day below that. And when you are in a bull market, it is the small caps that are supposed to be doing the leg work, and then the NASDAQ follows. We definitely don't have that right here, and this is definitely what we are going to be looking at here, with this being the week-to-date setup that we have. 4,400 we printed. Here is our 5-day moving average, which will be moving down here from 43.94 down into this unfilled gap, which is that 43.89. Came right below the 100% off the COVID lows yesterday, 43.84. 10-day moving average will also be moving down as it's here, 43.64. Pending somewhere around 43.60, which is where we are right now on the futures. And pending still is this 43.37, which is both no longer the 5-day. Now I have to go to the 10-day. It is this wick that we had over here back on June 14th. The wick down to the low side, which if I recall, that was our FOMC. Here we are, 43.37 right there. That is our pending little space right there that me are expecting. Not we, I'll use the proper pronouns. Me are expecting 43.37. We get to 43.37, we can virtually be assured that we are going to be seeing minus 4,300. So have a fantastic Friday. Have a glorious Saturday and Sunday. When we do get into the room today and start trading, I will be answering any and all questions in the best American that I possibly can. And I wish you all the greatest of greatest pre-4-day weekends.